Hello everybody. So I'm making this video actually for one of our community members, Deepak Chaudhary. He has got a very peculiar requirement, and yesterday he asked me this question. I thought this might be of interest for a lot of people, so instead of just making video for my community members only, I thought I should make it a YouTube video such that all those people who are not in the community, they also may get benefited, okay, or might be interested in joining my course, of course, right? Okay, so that's why I had made it a YouTube video, okay, and I think everybody should thank Deepak for that. So his problem is he has been investing for his kids' education, foreign education. So he's worried because dollar is appreciating, US dollar is appreciating, and against that rupee is depreciating. So he discussed earlier also, he discussed with me, but at that point of time I really tried looking for some exotic derivatives, and then I realized that that is not going to help people like you and me, those who are retail investors. Okay, they are mainly for foreign, mainly for big guys, okay, institutions. So then I did research again. Of course, I got my chat GPT, the paid version, as well as the Google, and I started discussing with him again. You see, one thing very important, if you do not know what to ask to ChatGPT, just blindly asking, hey, give me a good mutual fund. Hey, give me a good stocks. Okay, it doesn't work. It never works. Because I have used it extensively for various purposes. It is a thinking partner. It cannot give, yeah, it gives solutions, but not necessarily it is right and appropriate for you. So it is almost like, you are going to a professor, even asking him questions. If you do not know what question to ask, then there is no point. Are you getting it? The same is applicable here. So what kind of question you ask, then the counter question. So you should discuss. So now you say, I spent a lot of time in finding out the appropriate solutions for Deepak. Got it? So I have already told you this his problem. So what we do, let me give the background briefly so that you can understand. So in our community, it is a course. In that course, those who join that course, we create total financial plan. So we call it financial freedom framework. So where we make plan for each and everything, including emergency planning and then insurances, proper insurances, kids educations, home, whatever, and ultimately retirement plan, early retirement or timely retirement, whatever it is, whatever applicable. So that's what we do. So now, as per our plan, as per our strategy, and in that process we do invest in various assets which are appropriate as per our requirement, as per our goal, and lot of things. Okay, so now this is his problem, that he wants something safe and it is hedged against rupee depreciation. Got it? So that was his problem. And then we found out first what are the platforms where we can do that. So we found out so many platforms were there. Then after that, after a lot of discussions, so ultimately ChatGPT, he advised me to, he or she, or it advised me two platforms. One is Vested Finance and another is IND Money. So these are the two platforms is suggested after discussing that entire case. That would be best. Now, where to invest? So there are some ETFs which are related to bonds, not shares, not index. Now a lot of people, hey, you invest in US index. Yeah, we do not understand properly our Indian market, and people are talking about, hey, go buy US. Right? Please don't do that. Okay, that is my strong requirement. You do not invest in anywhere without proper understanding. If you have proper understanding about the US market, so then you go there and you invest, right? We don't have that proper understanding about US market, the way we understand our Indian market. Okay, so that's why we do not invest in such kind of stocks, and also it is goal based. So here the goal is kids education. It should be safe. We cannot compromise on that. So definitely we'll be investing in debt instruments only. Okay, so these are the two platforms, and I have told you. Hey, in the meantime, all those people who are watching it, not my community member, please do subscribe. Please do subscribe. Subscribe. You click subscribe, then only I'll go ahead. Okay. Please do. And you thank Deepak, okay, because it's because of him I am creating this, I'm making this. So thank Deepak and subscribe, okay, and also like also. Bye. And one more thing, if you have any question, you can just ask me in the chat box. uh, Definitely I'll go through it, that's for sure, 100%. And if doable, if I think that it is under my control, I can do it, we'll create videos for that also. There are few US debt ETFs this ChatGPT recommended. One is called SHY. It is 1 to 3 years US Treasury bonds. It's a short-term safe returns. And IEF, 7 to 10 years US Treasury bonds, medium-term balanced. And TLT, 20 plus years US Treasury bond. It's a long-term play. Long-term means long duration also, more volatility. So Deepak, you understand, right? So it is a long duration. It's a long term they are saying, but I can understand when they are saying more volatility, that means long duration. But it depends on your, okay, I'm so sorry, I didn't ask you for how long you need it. So the time period. So if the time period is say more than 5 years or so, so you can go with long duration. Okay, so it's okay, it's fine. And one is TIP, inflation protected US Treasury tips, they call it. If worried about inflation, I think being Indian, we're not worried about that. So now, so this it looks like TLT. Depending on if you are really investing for longer period of time, TLT is good, so you will be getting some good return. But let me tell you, when we say good return, now you see all those people who joined me some time back, and at that point of time we were very very bullish on debt market, okay, because rising, because we could foresee that the interest rate will come down, and it has started coming down now. So that's why you have seen some of our students even got 10% and 10% plus return also in debt funds. Okay, do not expect such kind of return from US returns will be much more humble. So that's the sacrifice, right? Are you getting it? You are hedged, but at the same time the returns are very minimal, 4% 5%. That much of return only you can expect. So my advice is, please join whatever platform you like, and then after that you discuss with them, because they are I'm pretty sure they have experts who can really guide you on this matter. So please discuss with them thoroughly. So now coming to the tax aspect, you see tax aspect, good news about this tax is unlike Indian debt markets, US debt markets products, they are subject to capital gain tax. If you are investing less than 24 months in India, there is no taxes. You don't have to pay any tax in US, but you'll have to pay tax in India. So if it is less than 24 months, then you will have to do a STCG, short-term capital gain tax. And if you are investing for more than 24 months, then there will be LTCG. And also the good thing is that it is subject to your inflation. Inflation means it is what is called indexation benefit. You will get indexation benefit. Okay. So I have, I think, given you everything. Okay. Right. So now please go ahead. And my suggestion is, final suggestion is, I have given you an idea where to go, what to do. Now how to do the planning. So you know how to do the planning, but still I am going to show you. So we have this calculator which is called stepped up SIP planner. So in that planner, the target amount. Because why I'm showing you? Because I didn't ask you actually what is the target amount and how much SIP you are doing and all this stuff, tenure, etc. So please use our, okay, let me record it. Screen I didn't record. Okay, so I'm recording here. So now, yeah, so this is our stepped up SIP planner, as you know, Deepak. So you put your target amount, whatever is the target amount. I don't know what is, like, say how much, 80 lakhs or something. I have no idea. Okay, number of years, for how many years? Say 5 years or so, 5 years. Then expected annual return on investment. As I told you, do not expect more from US Treasury, all this US bonds. So let us say 4.5%. So annual growth of SIP, suppose you are increasing it, say whatever percentage. Okay, so you can do that. Okay, say 10% or 5%. 6%. Okay, let us do 6%. Okay. So 80 lakhs with this calculation. So you will have to invest every month around 1,06,000 rupees, and you'll be able to achieve your goal. Okay. So yeah, please choose your platform, either of these two, as I have already said, and you talk to them. I think they will be able to give you better idea, but please do not get carried away. Always stick to our strategies. Okay. And if there is a concern, and if you think like you have some doubt, please come to our Monday support session. So discuss there. Okay, so we'll discuss it. Okay, do not get carried away. I'm telling you again because they may. So you see, last time they have got a 20% return. Why don't you go there? Okay, please don't do that. So we follow our strategies very strictly, and we stick to it, and we achieve our goals. Got it? Okay. Because we have seen some of our students actually, even after doing the course, some of them are getting carried away. Some of them have lost in crores. So please be careful. Okay. So yeah, thank you so much.